Hello, everyone, and welcome back. Today, we're diving deep into the Income Tax Act and uncovering something you may not have realized: the statutory designation at the heart of the Act. What if I told you that the term taxpayer isn't the true legal creature the Act relies on? Instead, it's an officer tied to an office in Canada. Let me explain. The Income Tax Act in Canada specifies that an income tax shall be paid as required by this Act on a taxable income for each taxation year of every person resident in Canada. On the surface, it sounds straightforward, but let's break it down. The term person isn't explicitly defined in this section. To find its meaning, we have to look deeper into how the law operates. In Canadian law, person often includes corporate entities, natural persons, and statutory creatures. So, who is the person being taxed here? Let's dig further. The Act ties the obligation to pay income tax to being a resident in Canada. But resident isn't just about where you live. In law, a resident can be a statutory designation, meaning someone connected to Canada's statutory framework, not necessarily just a physical location. This distinction is critical. Residency for tax purposes can tie you to obligations not because of where you are, but because of the legal relationship you hold with Canada through employment, incorporation, or other frameworks.
Here's where it gets interesting. According to the Income Tax Act, employee includes officer. Employer, in relation to an officer, means the person from whom the officer receives their remuneration. Employment means the position of an individual in the service of another person, including Her Majesty. When someone is hired by a corporation, they're not just taking a job. They're being appointed to an office in Canada. This office is part of the corporate body, which itself operates under Canada's statutory framework. Therefore, the individual becomes an officer of Canada, bound by statutory obligations. Now, let's look at Section 153 of the Income Tax Act. It states, "Every person paying salary, wages, or other remuneration shall deduct or withhold from the payment and remit that amount to the Receiver General." At first glance, this appears to place the obligations solely on the employer. But there's a crucial clause, where at the prescribed time, the person is a prescribed person. This prescribed person isn't the employer, it's the payee, who we now understand to be the officer. In essence, the officer, appointed into an office in Canada, becomes the statutory creature subject to withholding obligations. Here's where the Business Incorporation Act plays a pivotal role. It creates two subsidiaries off the Office of Canada. The corporate entity, corporation sole, when a business is incorporated, it becomes a legal entity operating as a subsidiary of the overarching Office of Canada. This corporate entity functions within the statutory framework, bound to the laws and obligations dictated by Canada's governance structure. The role of the individual: when a natural person incorporates or works for the corporation, they are appointed to an office within the corporate entity. This office, by extension, is an office within Canada's framework, making the individual an officer of Canada. This dual structure ensures that both the corporate entity and the individuals working within it are tied into Canada's legal and statutory hierarchy. The Business Incorporation Act, therefore, becomes a key mechanism for creating and sustaining the Office of Canada. So, what does this mean? When you take a job, you're not just working for a corporation. You're being appointed into an Office of Canada, operating as an officer within the statutory framework. As an officer, your remuneration is subject to withholding, which ties you further into the system of governance and statutory control. This setup forces natural persons to take on statutory recognition, which raises significant questions about consent and justice.